Good morning, everyone. Welcome to the Euro trade. We have metal markets. So let's have a look at some levels. But if we're meeting for the first time, welcome. I'm your host, Market Stoker D. I've been trading for almost 19 years at this point. I'm a Series 3 qualified trader, but I'm not a CTA. So whatever you see here are just suggestions rather than advice. And make sure you familiarize yourself with the risk disclaimer that Bruno posted in the chat. With that out of the way, let's have a look at what's happening with silver and copper. I kind of have my eye on copper today because it seems a bit calmer than whatever silver is doing. Both are in negative gamma though. So that means large moves can be expected on both sides. So be careful today. It's one of those situations where if a level doesn't hold, it will drop or rise like in a heartbeat. So with that in mind, I have some levels. So as always, I start with the options chain to see where the dealer interest lies. I've also only done ADRs for copper, but I still need to do them on silver. I'm running a little bit behind today. It was slightly chaotic. We're supposed to have our boiler repairman turning up, so I put on the space heater and it almost caught fire. So then my fire alarm kicked off, and I'm just going to say I'm awake now. If you're struggling with waking up, a good old fire alarm screaming in your ears throughout the entire house will do it. Alright, so ADR low on silver at the moment is at 74.40. Now, that doesn't have to mean much because we have an air pocket well below that. Well, what's an air pocket? Well, whenever there's a big space between one level to the next level of open interest in options prices and you're in negative gamma environment, that means if this 75 level doesn't hold, ADR is not going to do much for it, right? Because it's going to be an extended move to the downside, probably quite bouncy as well, so you might need some bigger stops. It's going to be one of those days where holding trades forever, unless you caught it right at one of these other areas, it's going to be a bit difficult. So don't try and do breakouts because silver can bounce like 250 ticks in the space of 5 minutes, sometimes even less than that, and that makes it extremely hard to manage risk. So really for silver, you would need a slightly bigger account balance. At the very minimum 150k account, but if you're somebody who still doesn't have consistent payouts, or you've only done one payout and then you keep blowing up account after account after account, that means that you don't have consistency. So I would really stick to 50k's in that case. And yeah, so maybe focus on something that is a little bit more palatable, like gold, that has true micros, because silver micro is not a true micro. It's a micro contract because the big silver is 25 ticks, so you know it's the fifth. Micro silver is fifth of the size of the regular silver, but it's still expensive, right? So keep that in mind when you're trying to trade silver. I know that everybody's got dollars in their eyes and they're like, wow, let's trade silver. But that needs a pretty padded account balance, and you can literally just run the account into the ground in a flash. So, you know, caution is advised. But, you know, copper has to be a little more stable. However, the implied volatility and general volatility of copper has gone up quite a bit. But when I look at the average ranges compared to silver and copper, copper is sitting back at like 900 ticks average, whereas copper is just over 313. So, you know, a little bit more palatable, meaning that, and it also has true micros, right? So 1 micro copper is $1.25, whereas 1 micro silver is 5. So it's like, ouch. So yeah, just being mindful of that market risk today. We also have NFP tomorrow. We could see some more unwinding moves. So let's have a look at larger time frames just to see what is going on. So as you can see, we are still in a bit of an accumulation or reaccumulation situation. And we have room down to the nearest demand, which is laying at 72,310. It's not too far from where the end of the air pocket is. And, you know, if you look at this candle, it was a pretty strong candle that always leads to some weaker structure. So even technically, when I look at this chart, big moves, clean, you know, rise up, that leaves unfinished business. Even though some people might look at that and go, well, it was a strong move. It was a strong move, but it happened so quickly that it creates a weaker structure because it's typically done on, you know, price velocity that doesn't leave a lot of volume per each price. And that's what creates the weaker structure. So it's an efficient move, but very frequently those areas will be revisited. That's why it's good to have a look at larger time frame demand and supplies. And the way that's looking now, we have one little demand here and then a supply that we're now creating. This is not yet done because we just had like one bearish candle. This is follow through today, but today is just beginning, right? So we have to be mindful that this is not a finished candle, so we don't know whether this is going to pull all the way back up. And whenever you have negative gamma, that goes for both directions. It's not like, oh, it's going to drop. It goes both ways. So we, at this point, we don't know which side we're going to get the extended move on. However, negative gamma almost always leads to pretty crazy days. So I wouldn't say it's a squeeze because that's something different. For a proper squeeze, we would need to go back up over 80 and then see some acceleration above that. At the moment, we don't really have that. All right, so ADR high for silver is 79.40. So I'm just going to adjust this. If you look on my Twitter, which is in the description below this video, you will see that I am seeding hashtag metal markets on Twitter. So if you want to tag me, you know, send something, just do hashtag metal markets and I will be able to see it. Anything you want to share, payouts, blown up accounts, trading stations, anything, I want to see it. Right, so ADR high for copper. Where is that? Let's have a look. I need a crosshair. Okay. Okay, ADR high. Kind of somewhere around Asia high, which is an interesting outlook. So 593. 593, just above Asia high. And actually, let's name this. Hashtag, not hashtag, slash ADR high as well. Then move it to dash lines, because that's how I like to do my ADRs, my quantitative extremes. Alright, so we're touching the potential escape hatch here for a smaller move. I don't like the profit margin here because they could just end up hedging here. But I want to see it touch VWAP and then maybe see some more shorts there. Alternatively, test of 75. And then either a bounce or a breakdown to get into this air pocket. But copper, again, similar outlook, slightly less crazy though. So if we don't hold 580, we do have a little bit of space to the downside as well. So let me just reference those levels. If I can go back to the copper levels. Okay, so if 580, so 569 would be, that's crazy, would be kind of, let's go to 570, right? So it would be all the way down here. So, you know, pretty big drop. There is nothing really below 580. So all of the open interest below 580 is super thin, right? And the implied volatility has gone up, and we are in pretty deep negative gamma, but not as deep as silver. So that's very interesting stuff. And this, of course, could be just profit taking ahead of NFP, right? So it could be the reason for it. Tomorrow is a big release. It affects everything. And yeah, but basically, if 580 breaks, there's really nothing until we reach 570, 569 really, but 570 is a nice round number. So let's put a line just to have that in mind as the day develops. And then to the upside, we would need to obviously clear VWAP, maybe even clear 590, you know, if we are going to play devil's advocate to the upside with the trend, just in case they want to do a mean reversion. So that one is a bit more difficult to read, right, because it's quite far away. So if we're going to run anything up to that, I would need to see, at the very least, a retest of 580, and I would need to see Asia range holding. If that doesn't hold, then whoosh. So yeah, setups that you might want to be looking at is like breaks of the initial balance low, single prints to the downside, maybe retests of initial balance low, and then the inability to hold inside the initial balance, so testing it and then coming out of it, coming out of it, coming out of it, and basically initial balance low acting as resistance to the downside. When it comes to the open sentiment, we are way below London value, but we are pretty close to COMEX value. So let's plot both of those. And this is the London value, so all the way up here. So you can't even see it. It's so high up. So what? Where is it? But COMEX is a bit closer. So we're literally underneath it. Now, depending on how that happens, there is a chance of the value acceptance. And again, clearing VWAP would open that up. So strong close above VWAP without any meaningful selling wicks. And then obviously commitment from the buyers. That would mean a rotation all the way up to 590, which just by accident, there are no accidents, is also the value high from COMEX yesterday. So yeah, very interesting. That profile and gamma exposure levels are always in alignment with whatever the prices are trying to do. Another thing I'm going to do here, I'm going to put the developing profile just so that we can track how price is behaving. It's still early days, but we want to see whether we're inside value or exiting value. However, just keep in mind that this is a developing value, so it is subject to change. Silver is trying to go higher, but running into that 76 area, and they're hedging. They are hedging. So we'll see whether that can do something. Maybe if they fail back into the initial balance, that could be a short setup. How much stop would I need there? A lot. So maybe we can, I don't know, look at a tick chart to try and limit the risk there somewhat. Yeah, maybe. What is that? Let's see how much cash that would require. Now, for my stops, I always like to use stops that are a little bit wider. Now, in this case, let's say 65 might be. Oh, hold on. Let me switch this. So 65. Do I have 65? Yeah. Okay. So let's just do one short silver here. See what they want to do with that. Test a trade for the morning. And let's see if we get some commitment back to the Asia low, maybe even through it, but I'm not going to chase that. So let's see how they play it. We do need to see follow through here, so I need this structure to break. If it doesn't break and it creates a range, then I do not want it. Alright, so how much risk is that? We are working with 325 risk. Yeah, Kareem says microsilver is crazy, wouldn't recommend it for 50k accounts. Kareem also said, show us your dog. Which one? Because I've got 1, 2, 3, 4, 5 of them in here. Let's see, who's going to be... they're all like huddled up because they are very cold since obviously my boiler broke down, so they're hugging the blanket and stuff. So let's see, who wants to come and say hi? Anyone want to cuddle? Manny, want to cuddle? Want to cuddle? I've got one blankie. They're all ignoring me. They're like... Being ignored by a dog is not good. Come on, Manny. You want to come up to Dee? Oh, 7. There we go. 7. She's Manny's twin. Come on, 7. Up you come. Let's go. Yes. Oops, we're falling. Oh, God. Okay. So this is 7. She's a female. We actually have 3 black and tans in each size. So one is a tiny thing. She's a medium girl. The medium girl. She's a bit nervous. She was, for some reason, born anxious. And, yeah, so this is 7. She's 7 of 9, of course, by Jerry Ryan's character in Star Trek Voyager, because I'm a nerd. And yeah, so she's excited to be here, as you can see. Are you excited to be here? Yes. Say hi to chat. Say hi to everyone. Like, do you have any bickies? That's all I'm interested in. Bullish on bickies. That's a good thing. Yeah. There's no bickies. We can get them later after we're done work. Yeah. So yeah, she's she always has this like freaked out look. Yeah, and she's a little bit maladjusted for some social situations, but she's been going to doggy school, and I hear she's got a boyfriend. So yeah, it's a very interesting development. Joe, could I explain the thought process behind the silver short? Yeah, so negative gamma environments can bring both pictures into consideration, so it's not a direction, and we could go up, but the silver short that I'm taking here, I would say this is more of a scalp, because 76 is an area where dealers should hedge. Now, if that breaks to the upside, I said here escape hatch. Why? Because if that breaks, it means that one of the bigger open interest strikes has given way. So that will lead to an acceleration if you're in negative gamma. So any options level, when you have the negative gamma environment, can bring acceleration through high open interest strikes. This is in stark difference to positive gamma, when you have a pretty high potential for a definite mean reversion. So this is just like a punt. I'm taking a short because I know that we get stuck in a range during London usually, and we touched the level that had the highest open interest. But if we go back down to tag 75, which should be another magnet, and we break that, the negative gamma environment is actually going to act as an accelerator to the downside too. So whichever way you look at, whenever the first area with higher open interest gets tagged and broken, that will cause acceleration. Okay, so that's like the gamma exposure side of things. It can be a little bit much to kind of get your head around it. You can use AI for this purpose to ask it, like you can copy stuff from bar charts and then just ask it to crunch some numbers and to kind of tell you what's going on as a basics. But I do have about 3 different algorithms that I wrote, and then I'm just prompting Cursor AI, which is something I use to help me, to give me some probabilities of how things can play out. So, you know, if you're using something like ChatGPT, it's probably not going to be terribly good, but what it's pretty good at is just getting data and crunching it. So basically just saying, give me the prices with the highest open interest and order them in certain ways, right? And ultimately that is what you see on mental Q levels as well. But they use end of day data, whereas I wanted to also have intraday data as the day develops. So, you know, I will kind of run the algorithms, and I have several. I have one that's an implied volatility tracker. I have one that just crunches data, just numbers. And then I have another one where I input the levels and I weigh them to see which one might be you know, more relevant than the other one. And I also have something that tells me the call and put ratio and how that's developed from on a day-to-day basis. So yeah, we'll see whether 76 holds. If it doesn't hold, then it's going up. But yeah, generally this time of day, it's not the best for trending moves higher. So, but it's the negative gamma that's pushed me into a short. Again, it's a punt. So, you know, if I see that 76 breaks and there's still no engagement here with shorts, but, you know, they gave it a good go. There was some hedging. If we get stuck in a range, that's fine. My stop is just above that 76 area. Probably not large enough to withstand any bigger push. But actually what I'm going to do, I'm going to look at time and sales, actually. I prefer bookmap for this, but it's just like too much stuff. And we always want to go to the biggest contract. So we're going to see whether this escape hatch is going to run it higher. And if it does, then we can flip. But I wouldn't, like, I don't want to do flipping and flopping for people who are not confident in what they're seeing, right? And I'm still just looking at 76. So we're still below it. So nothing to do here. If we break it and go into a new high, then that's my invalidation point. And then that will be over. But if not, then maybe, depending on the velocity of the price, if they turn it back down, we can even extend this down to below this low. So we'll see. It's a very small stop for me, right? So usually I like to use 85 ticks on 85 to 150, believe it or not, on silver. But yeah, we'll see. So far, they're not exactly running through 76, are they? So we'll see what happens there. And again, be mindful in negative gamma, everything's amplified. So as long as, the way I look at it, as long as 76 is holding and we have like constant bouncing away from it, that's a good thing. Irrespective of where my entry is, 76 was the orientation. Obviously I was messing around with other things, so that punishes you on silver when you're kind of talking and doing other things, and then I want to enter around 76 or 76.90, but then it drops and you end up, you know, a little bit lower. But that's fine. That's why the stop needs to go well above the reference area. And you know, usually I like to keep my stops at 0.3 or 0.37, so it would be a lot better if the stop, it would be a stronger setup if the stop was up at 76.37, because, you know, silver can easily do that range. But I'm just gonna check the range here. So the average range across the candles is it's about 36 ticks on this one, just on this little tick chart. But yeah, let's see how the close of this TPO happens, because if we end up in a single print, that will also be an invalidation. And then we're gonna exit, early exit. But yeah, like I said, it's a punt. My favorite trades are the ones that go into a reversal into the euro close. Those are super high probability trades. Again, this is a weird time of day to be trading silver because usually they go very sideways. Like probability of silver going, or all metals going sideways for this time of day is super high. So again, if that happens, it means that we've kind of found the top for now, and then it's just going to start chopping in a range. Of course, negative gamma might have different ideas. And like I said, if we go above 76, that is an escape hatch, but we do need to see actual strong movement through it, and that's still not happening. They're still defending, so every time it gets up there, somebody defends it. Gets up there. So until that changes, I'm going to stay in, and you don't freak out. You accept the risk, especially in the beginning of the trade, rather than, you know, it going slightly against you and you're going, ugh, and then cutting it. So you have to have stops at relevant prices and make sure that your stop is away from any round numbers that you're looking at, and it's going to be a round number. But yeah, so there's a number of things at play here, so hopefully I was able to explain that. But yeah, as long as they are not popping over 76, we're okay. If that changes, then we exit, and it's a small loss, so it's fine. But the huge profit margin that silver offers is something that is well worth withstanding a bit of a drawdown upon entry, as long as you're not nitpicking on stops, because you can't really do that with silver. Silver is a bit sketchy that way. Yeah, so Xian says, does escape hatch mean escape out of shorts? Yeah, so if they go above 76, the escape hatch means they've cleared the next biggest open interest and they haven't hedged, and we're going higher. And in negative gamma, that will be an accelerator rather than a hedging point. And of course, with the way silver has been, we could also be in a situation where they wake all the way up, they take the stop, and then they come back down. That already happened, actually. So let's go back to the 30-minute time frame. So let's see how Asia, late Asia, played it. So they fell all the way through it. They tried to go higher, and look at this. Look at these horrible, horrible candles. They're like, whoosh, we're going higher. No, we're not. We're coming back down. That's scary, scary stuff, man. So if you're not familiar with silver and metals in general that tend to love doing crazy things like that, you will be trembling. There will be butterflies in your stomach. You will try scrambling to see what the hell's going on. At the very least, it would take you out of your short, because you would be like so scared, and then you see this. So they already did that, right? They already tried to go above 76. They failed. This is now a second attempt at that. And obviously I'm counting the take profit behaviors into this whole analysis because we have NFP tomorrow, right? So we could have some people who have made a killing on the upside, taking some profits ahead of the biggest release of the month, which is tomorrow. So, you know, and negative gamma is, you know, reflective of the extended targets that we might see today. So we'll see whether they keep it below 76. For now, they are trying to fail, so they're trying to hedge. Who's they? The dealers, the wizards. But we still need to see some commitment back into this developing value. So I'm not a huge fan of using developing value because it like changes all the time. But once you start falling into it and building more TPOs per row, and the thing is we've already built 3 of them per row when we were going up. So it's not like I know it looks crazy, but it's not the strongest auction. So if I just quickly show you my other logic platform with my Blatic market profile, DR, all of that, I see 3 TPOs per row here, ABC, and then here's ACD. Here we have an anomaly, and that generally tends to mean that the auction is not super strong. So that's all in the Market Stoker's method. I teach you how to read the auction strength versus weakness. And the fact that Asia was very jumpy, so they attempted to go higher and pretty much failed. I mean, there was no interest in taking this above 79, which was the orientation point for yesterday. And then we just had no rotation. Like, there was no rotation. So is the rotation going to happen through London? Maybe, but I would expect to see some more downside first, purely because it's negative gamma. Every time they tried, they failed. So that's all I'm looking at right now. Right, so we're holding below it. So let's see if they start to spend time inside this developing value, and then eventually inside the initial balance, which is a little bit lower. The initial balance is the top of this candle. That's the initial balance high. If they start dropping into it, we have a good chance of a failed auction, which is a rotation to the opposite side. So wherever that came from, which is basically all the way down here. And that would increase my profit target. But first, the first OODA loop, or ODA loop, observe, orient, decide, and act. We're observing that we're struggling and that we are now starting to tag the value, building 3 TPOs per row. And now we're looking for a rotation through value and eventually through the initial balance in the form of a failed auction, which is tagging the edge right now. So there could be a chance that they touch the IB high and then bouncing back up. That's always a possibility. But let's see how they want to play it. So far, 76 is resistant. I feel like a sports commentator when we're doing these. It's like, prices attacking, 76. They're hedging. They're hedging. There's a pigeon on the court. That's a reference from a cricket commentator, because cricket is a very exciting game. So they have to reference what the animals are doing. So basically, one day I was watching cricket with my husband. I don't like cricket. He loves it. And a pigeon had walked onto a court. And I kid you not, the commentator focused solely on the pigeon walking. So it's walking towards the middle. It's walking towards the silly point. And I'm like, what's he talking about? And I gotta feel like that when we're doing the prices run through. Right, let's go back to the tick chart, because it's just going to provide a little bit more. But yeah, so trying to mess around with the value area, we do need some more serious follow-through to the downside. Otherwise, this is going to be that range that we're talking about. I just hope that the range is bigger. That is an unknown, so I don't know where they're going to get stuck. Or are we just going to use the IB high for a springboard, and then they're going to run through 76. We shall see. But I do love all this stuff, like just playing detective all day, every day. It's pretty awesome. Shouldn't these options levels be valid? Should these options levels be valid for New York Open? Yes! They are monthly options, so they are valid actually not just for New York Open, but also for the rest of the week. So if we don't get the, because silver options are not, like, they're not that dynamic. Like, they will change somewhat. Maybe the size of open interest somewhat varies day to day. But generally, when I'm saying, like, from yesterday, 80 was an orientation point. 80 remains an orientation point as long as we are chopping between sort of 75 and 82, because that's that big range. So it's valid for the entire week. That's why many people who watch these videos, even if I don't have a trade at that point whilst I'm doing the stream, mentioning all of these levels, 75, 76, 80, and then further down, 72.50 is an extended target in that air pocket, where there's absolutely nothing to the downside. That remains in force for many days. So, they kind of I've had DMs from people going, I mark your levels, and they just end up being the important inflection points on the day. So you absolutely will see the same levels reacting. Now, obviously, COMEX is pretty big when it comes to the volatility. It's much more spikier. Like, I actually prefer Asia silver trading because it's smoother, and once they decide on direction, there's not much like push pull. Whereas I feel that the whole sort of 2.5 hours of COMEX, it's all just a tug of war between, because it's different than equities, right? Equities have an upside bias, so you could have IB, initial balance in equities. It's beautiful. Like yesterday on YM, it just went into an early value acceptance and just like nicely rotated down to ADR low. It's perfect. But usually in commodities, that sort of a real movement where they decide where they're going to go typically happens into the euro close, or at the very least after the 10 a.m. cut, which is also the time when gold has its pricing for the PM in Europe. So, you know, there's a whole bunch of stuff happening after 10 a.m. New York time, 3 p.m. my time. And really, I don't like trading before then for the New York session. Whatever it is that I'm trading, is it, you know, gold, crude oil, equities. My prime time and highest probability trades usually come within the 90 minutes post NY cut. So 3 p.m. till about 4:30, maybe 5 p.m. And just note, if you're going to trade copper today, which I'm planning to do, 5 p.m. is pretty much the end, because the LME is the one who trades base metals, and they finished trading at 5. They've been having a lot more effect on the price, and I now am starting to consider 5 p.m. as an out-of-hour session, because nothing happens much in copper. So if you can get a trade in those kind of 2 hours, 3 to 5 p.m. GMT, that's it. And then if you want to trade more after that, just look at silver, look at gold, look at something that actually moves into the COMEX settlement, because copper is not going to be doing it. Unless there's like a speech or something, you know, Trump comes out with some crazy tariff news and relating to copper, then yeah, you know, but without a catalyst, it's just a watching paint dry moment. With the recent price action, are you looking at gold before taking any trades on silver? Always, always. So gold is the big boy. All of these are priced against the US dollar. So there is that component. But when it comes to metals, on most days, gold will be, not always, like out of all of these metals, I would say that silver and platinum are probably more sensitive to the gold movement. Copper sometimes has a mind of its own. Like I've even seen it go completely the opposite way to the other metals. Because it's a base metal, it's not a precious metal, right? So it is going to have some differences. But generally, they tend to... it's almost like a delay. So if gold does something, in fact, we can maybe put 3 of them in here. Let's get rid of this, and then let's do this. And we can maybe put 30-minute time frame everywhere. Let me just extend this and see what gold is doing. So gold, weakest out of all of these, yeah? So it's already down at the value area. Now I'm expecting that copper and silver are going to have like a latent reaction to this. On gold, 44.50 was the problem area, so the one that we would need to clear to the upside. And is this really Asia low? I don't think so. Hold on. Just have a look. No, so Asia low was there. I didn't do the gold analysis to this depth, because obviously with the Asia high, Asia low, that's important for trade locations, and it's like how we're behaving around it. Asia session is the one that does price discovery for metals in particular, but other things too. So, And actually, I finally finished the edit of the new YouTube video on my Market Stokers channel. It's going to premiere today at 4 p.m. GMT. So just, you know, you can go and look at it. It's already up there. And it is about ADR. Now, those of you who are my Market Stokers like Joe, you know how to use ADR. But some of you who are wondering, why is it that, for example, you see this ADR low that gets plotted at the beginning of the day? Why is it that the price touches it and just runs away from it? Why are they so reactive? And, you know, I explained 3 different strategies. But be forewarned, I decided to show a little bit of the way I really look without makeup. So I start the video straight out of the shower, red face, you know, and then I also do the makeup on camera, and then we go into the office with me looking like I normally look, and go into the filming studio to talk about strategies. So just be forewarned, you're going to see some chronically ill D, the way she usually looks when she's not streaming. Car crash. So be prepared to hide your children, because they might be scared. But it was time for me to show that I'm not quite as perfect as people imagine. I'm just joking. I just couldn't be bothered. I needed to do the intro, and I actually filmed it across like 2 days, and I still have a Christmas tree in the back in the beginning. The audio is a little bit sketchy in the beginning because I'm using my phone, so it's all echoey, and then my Cavalier decided to start walking in the background just as I was filming, but it had to be done. So yeah, I thought it was a pretty fun, more real video. So yeah, 4 p.m. GMT, ADRs and Blatek Discord utility levels. Right, so if we look at how all 3 of these are, copper would be the strongest. Why? Because it's ungluing itself from the value area. Gold, the weakest. But at the same time, if this keeps dropping, it's going to have a knock-on effect on both of these. If that happens, if it keeps going lower and lower and lower, you will see the same thing happening in silver with a little bit more drama and a little bit more latency, so to speak. So it kind of provides you almost like an insight into how things will happen. Doesn't mean much, because that's like, we're talking like seconds, but to me it does help to kind of go, well, if gold is weak at some point, like, you know, if we don't find buyers here, then silver is going to have to correct at some point, because they are correlated. And of course, gold could suddenly go into some massive move up, clear the 44.50, and then this one will be invalidated, but that hasn't happened yet. On copper, you can expect to see the pullback only if gold drops significantly, because at the moment the correlation between the two is not that strong. And let's actually have a look at what the actual correlation coefficient is. So normally it's kind of close to 0.8, but at the moment it's fallen to 0.3. So almost no correlation to it. All right, so here's that gold drop, and here's silver following. Now, whether it's sustained or not, again, depends on how gold is going to play things. So we need more shorts in order to pull this down. But that was a very nice drop. So let's see if we can rotate to former Asia low. There was already liquidity grabbed. Stop running in reverse. And then first step is value low. Second step is initial bounce low, all the way down here, sub 75. Okay, gold is dropping further. It's pulling silver with it, but silver is more volatile. So for every drop that gold does, silver is going to go boing, 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 like a yo-yo, until it definitely makes the move. So again, if you've never traded metals, this is what they do. You know, you have to watch multiple charts. to get a really good gist of what's happening. And can silver just have a day where it's doing its own thing? Yeah, but it has to be related to like some sort of a catalyst, like let's say ISM, some kind of automobile thing. Obviously, issues with supply in silver, that's all silver dependent. It has nothing to do with gold. And on those days when we have this kind of news, we can see, we can definitely see extended movement in silver, and gold is just chilling. Gold is like, don't care. Don't care. All right, so let's see if gold can come below this value. It's trying. And then silver at some point should follow, because this had a drop, this one didn't. And if the drop goes into this wick, then we should see some movement back down in copper as well. This is all like triangulation, co-integration, however you want to call it. I actually had a co-integration bot back in 2015. And it was in Forex pairs, and it played on the fact that the New Zealand dollar and Aussie dollar had massively high interest rates compared to the rest of the countries. And that led to huge momentum, especially in exotic, slightly more exotic pairs. All right, so here's that movement in copper. And then that went away because all of the countries lowered their interest rates. But I am pretty familiar with co-integration baskets of different things and stuff. So that used to be one of my specialties. So I still use it like just visually. But, I wouldn't be coding a bot that would play on effectively the spreads between a couple of different metals. Because it doesn't quite work that way. But because in the currencies, a lot of the currencies are very connected to USD as a common denominator. So whatever happens in USD, eventually there's a knock-on effect across the board there. All right, so it's still dropping. Whoops, okay, that's a bit of a jump here. Now, I don't really necessarily want to give back a little bit of a buffer here. So let's see if gold can just keep dropping. It really needs to stay below this value. And if it doesn't happen like very soon, because at 10:30, in 10 minutes time, we're going to have the gold fix for the AM session. So that's coming in 9 minutes. All right, let me have a look. What time is that Chicago time? It's going to be 10 a.m. Chicago time for the video. Yeah. Do I need voiceover? Well, no, I do my own, right? It's a weird question. Hey, Dee, you're a live streamer. Do you need a voiceover? Yeah, sure. Come and talk instead of me. Just going to sit here and go. But that might get a bit difficult. So yeah, yeah, I do my own voiceovers. But thank you for offering. I appreciate it. If I do need something, maybe I'll reach out to you. Maybe new videos or narration. I just think it's very much quicker for me to do it. Because every time I work with voiceover artists, and I have done in the past for other things not relating to trading, I always found that you have to like spell everything out. And I've done music videos before where both like directing them and also having my own, and it's such a huge endeavor. Like, oh my god, even if you have like 15 people or 20 people involved, some of which are actors and extras, and then the rest of them are like crew and stuff. Typically there's about 5 or 6 people in the camera crew and sound. And then, actors. Alright, so this is kind of pulling back. I don't really like that. But you know what? For the sake of not freaking out, let's just leave it for now. It's still, silver is kind of trying to decide what to do around the initial bounce high. I'm very mindful that the range could be in force. So, you know, this is not meant to be at this time of day some massive trade. If we get to my 11 o'clock, which is going to be in about half an hour, you then have things livening up. So you get pre-market LME, which always has a knock-on effect on silver as well, even though technically precious metals do not trade on LME. But they used to. So whenever LME Select runs like 24 hours, copper moves and then it kind of pulls the other things along with it. But yeah, everything starts getting a bit more lively, and the real intent behind what they're trying to do only becomes obvious after my 11 o'clock. Sometimes even after 12 p.m. London time, which is the silver fix. Silver only has one price fix per day, as opposed to gold that has two. So I'm very aware that this is probably not going to have as much legs at this time of day. Time of day is a level, so we need to wait for bigger moves to come. So this is more like scalpy scalp here. I would still like to get the bottom of that value, but I'm not liking what gold is doing. So let's see. Maybe go to a tick chart again, because that tends to provide. And you see, this is a time where I would actually do this. So this is one of the rarities of me trailing. Why? Because it's more of a scalp. And if this wicks back up, I don't want to be down on the day. So now, even if it wicks up, I don't care. This is not a swing trade by any means. So this is where trading the stop, because it kind of did what it's supposed to do in the beginning. Now it's struggling. So I'm not liking that. And if there's no follow through here, I obviously want to protect the capital. Let's have a look at something. All right, Joe says, Asian low and high. Do you consider Tokyo or Shanghai? Both, really. So the entirety of Tokyo session includes Shanghai, right? Because Tokyo starts at midnight my time, then Shanghai kicks in at 1:30 a.m. But the difference will be that Shanghai will be the one to bring volume. So, you know, they start it, and you can see the massive difference. So you can see this here. This is pre-market Shanghai. Tokyo, nah, we start. You're trying to trade Asia and metals. You need to wait until Shanghai, at least pre-market, and then you need to wait what they're going to do, because they have a massive amount of volume. And in this case, they went higher and then reversed hard. But if you let's have a look at silver here, actually. So the big trade that I did the other day. Here we go. So this is the fake out pre-market, right? So you get Tokyo starting on this candle, and it kind of looks like they're in a range, and then you pop in a trade, and you're like, you don't know about Shanghai, and then this happens. Whoosh, whoosh, turn around, let's go! And that's Shanghai. So if you don't know that Shanghai brings this liquidity grab below or above Tokyo levels before it makes the real move, it's gonna like come and bite you on the old peach many times. So what I usually do if I'm going to trade Asia, I will wait for that typically, and then it's going to go. Obviously, I have to be around some important levels, and on this day 76 was the level that we stopped at for COMEX, and then they wicked it below the Tokyo Open, turned it around, held 76, so notice where the 76 is, then they made a strong push. At that point, it's a little safer. The problem with yesterday is that when they were starting, I didn't really have any important levels. So I had the 77, but by the time Tokyo opened, that was already gone. So this was Tokyo, right? This is Tokyo. They're already way high up. So it's like, well, what's more likely? That they're going to retest 77 or that they're just going to start going without? Because remember, they have to pick up a lot of orders in order to create momentum. How do they do that? Liquidity grabs. So they grab a whole bunch of stops, then they have juice juice to turn it around and go whichever way they want it, or to keep dropping. It depends. But taking some people's stops definitely comes with extra volume, right? That's how they generate the movements. So if that, if that's not happening, or you don't have a level where that could happen, it's all a bit sketchy, right? So last night I didn't have a good setup in metals, and I went to bed. Had a very long day trying to finish that video. All right, we're dropping. We are dropping. The metal screamo thing. All right, value low first and foremost. Then if that doesn't give much, then we can extend this. Not all the way, but just a little bit. All right. What are you going to do? Right, so tagging value low. Target 1 if I was in multiple contracts, but I'm not. So you know what? I'm going to take this. And because, I'm talking, we found a trade. It's a London session. It might range. And I'll get, a bigger trade later on. So nice little buffer. Nice buffer to start the day. And, this could carry on. But value low can bring a bounce. We also have Asia low here. So, tricky situation. So yeah, I'm happy with that little buffer trade. Escape hatch was a hedge. And now we're going to be looking down to 75, how they're going to do things. We maybe get stuck in a range and go back up to the escape hatch. I don't know. We shall see. All right, Ross says, gold London IB high is also yesterday's US IB low. Yeah, very good confluence. Just above that is 1 hour 200 SMA and VWAP. I like shorts, but I think it might not happen until after COMEX open. You're absolutely right. You don't have to trade now. This isn't, like I said, this is an odd time of day to trade. And that's why whenever I do trade, if I see something pretty obvious, which is not always, sometimes we're just sitting here and chatting because I don't see a trade. And then the whole thing is more of a class than, a trading show. But hey, that's still very valuable, even more so, I think, than me clicking buttons, right? But when I see a setup that is obvious, like this one, I do take it. However, gold and silver will be doing the final sort of push at least like 30 minutes before the actual COMEX opens. So that is a time to start seeing what they want to do with these prices and how they're behaving. But just be aware that recently, COMEX, the first 90 minutes, is a complete shit show. And then they kind of make a decision, and they only show their true intent or reversal or complete smash through levels as we get closer to the Euro close, so the London close time. So yeah, I just really dislike trading when that's happening. So I would typically do maybe like the way I used to run my day is to trade DAX this early in the morning, because that is, in fact, these streams are supposed to be DAX, and then to have a big break, and then to start looking at probably metals around midday when LME is running, so maybe I'll find a copper setup, and then to also start looking at how silver and gold are behaving in relation to my levels. And then once 3 p.m. my time comes, 10 a.m. New York, 9 a.m. Central, I will be looking for the actual setups. Most of the time they won't even come until half an hour after that, so we're looking 10:30, maybe even 11 New York time, and then you typically get the reversal as a high probability event. Not always, obviously depends on the day. Like today, if we do get a reversal, it's going to have to be much lower. So I want to see it massively drop, and then maybe they stop somewhere. And if they're still around these levels and this 75 holds and we're still at 75, I will be looking for longs from 75 into the London close. And go figure, I was wearing a copper suit, expecting to trade copper, but we traded silver. Dee got the wrong blazer. Coach Carter says, hey, Deeyana, Happy New Year. Happy New Year. Happy New Year. D is the purple line 50 EMA. No, it's, so this one is an anchored VWAP from the LME yesterday. And this one, this purple line is Globex VWAP. But this one, literally yesterday, when LME started, I started noticing that they were also very much all getting pulled by whatever gold was doing and whatever copper was doing, strangely. Copper seemed to have been like the driver for the downside. It happened first, whereas silver and gold were like, are we going to go down? We're not sure. Let's go long. So, and then it all just broke down. So it was a dangerous day. And yeah, so I anchored the VWAP, this lighter purple, to show me, and I'm going to do the same when today's LME starts. You can even anchor it to like the silver fix. That's kind of very similar. It's within 20 minutes of each other. And silver fix can bring either, like usually reversals, but again in negative gamma, whatever you've got going on up until then, it's probably just going to continue. So it could happen either way. This is NFP week. Anything could happen. ACH, right? And it's an outlier week, you know. There's a lot of unwinding moves. People are taking profits. People have made a killing. Who's the people? The institutions, of course. Because, you know, your mate down the road, Dave, who made, you know, $600 on his Sim XFA, that's not going to be a relevant person, right? It's going to be, you know, the JP Morgans. It's going to be the, you know, the Barclays Capital of the world, the Goldmans. So, you know, they are the ones who I refer to as the wizards, jokingly. But, you know, they definitely hold the power, you know. I've got the power. Yeah. Could I outline a plan for longs on silver? I would be very careful with longs today, man. So again, the outline is that we would need to hold 75. Alternatively, we will need to see a very strong run through with no selling wicks through 76. So if the 75 is not there, you look at the next open interest strike price. If they clear this one, and by the looks of what they already did during Asia, they would also need to clear 76.50 really, because this is 76.40 and they failed. So this entire zone, I would say, is a danger zone. Danger zone. It's a karaoke day. Danger zone for the longs. So, but if you can clear this unclean arrival, as the supply and demand people call it, because this is a form of supply. In fact, if we drop down to a 15-minute chart, you will see that it is a supply. So you will need to clear that properly and to see some real commitment as an accelerator through it. So that would be then opening the road to VWAP, and then your next stopping point, looking at the OODA loop, so observe, orient, decide, act. How do they behave around here? If we go higher, this will represent a gamma flip, and then from 77 higher, it will probably revert to a more positive gamma environment, so things might get a little bit grindy, slower, so don't expect that everything is going to just keep screaming to one side, especially not during COMEX. It's just not the feature of that session. Maybe if we were doing Asia and we were kind of coming up against VWAP that is also at a put wall, you could expect a very nice run through. It's a much smoother ride. But COMEX is just all over the place. It's very speculative. Everybody's trading. Everything's crazy. And then, you know, everything settles, and you get that really nice, clean reversal into the euro close when you can find some setups. If we look at yesterday's moves, so let's have a look at the 30-minute time frame. how that worked. So here is the beginning of COMEX. So initial drop, big buying wick, again 77 was an orientation point. They go down, then they go up, then they go down. It's like I have a friend who's an Australian dude, and he calls this price action up and down like the horse draws. It's very accurate. And yeah, so really, when did the move come? So here is 3:30, so half an hour after the NY cut. We get a doji. Still scary, right? Still scary. And look at this VWAP from the LME/Silverfix. Being super reactive. So really I was looking at this and I was trying to see if I can get a move above that. And I know that 3:30 p.m. my time into 4 p.m. is the prime time of day for reversals. But look at this. Like, what is that? Like, how do you trade that? You don't, right? Once things settle, this is when I strike. But I had this to clear, so I actually did like a couple of trades where I was like, oh my god, we went down away from VWAP. So I took like scratch trade, and then I started seeing some real commitment here. And then the next time that they touched VWAP, it was like a third touch, and they just ran straight to it. Then we had the lunchtime, which was a bit meh. So yeah, I just got this trade. It wasn't the biggest day, just got that trade really quick, and that was it. So nothing really much to speak of, really. It wasn't. In fact, the way I look at things, that was more of a scalp, if anything. All right, so I'm happy that I exited that, because look at this bounce from this developing value low, and because gold also bounced. I could see them on the tape. I could see them. They're like, yeah, let's go back up. But this is now a range. So scalp was the right call here. Yeah, bigger moves to come later. All right. Okay, Ahmed says, D, if a trade is going in my direction, good. When do I know to get out? I just use 2R as a default. But there are times when you end up in an outlier day. However, for the outlier days in holding trades as long as I do, you really need some heavy context. Like, for example, when I held the big trade from the other day, I had context that we had a squeeze above whatever it was. I think it was 75 that day. And then I saw the potential to go at least to 80. At least to 80, because I've seen those days happen before. It ended up going to what, 82 or something on the day, and that was just insane. So I held it for most of the day, throughout Asia, through the entirety of the day. You saw a portion of it during one of the streams this week, but yeah, it just kind of carried on. I'm like, where does it end? But I did have a projected second standard deviation higher up, just for the cases where a gamma squeeze is happening. This is not a squeeze. This is now just like negative gamma environment that brings amplified moves. But that could also mean a range, like a range of like 700 ticks. How do you manage that? You don't. So it has to be very contextual. But just to begin with, whenever I'm teaching people, my methodology is very dependent on using the appropriate stop loss for the instrument, which really, if you want to do it as a sort of somebody who doesn't want to freak out in a trade, you divide the average session range. Like, for example, in copper right now for COMEX, we have 210 ticks. So if you divide that by 4, 5, or 6, depending on what you're trying to achieve, you get a pretty decent stop size. I like 4, 5 on most times. The only time I would go lower at like 9 and 10 would be because I'm looking to minimize mainly the prop entries. I don't really do that on some of my other accounts that are larger, because they can withstand bigger movement, and comparatively, if I do one silver micro in my YOLO account, that's usually like, at least I keep it to about like 100, 150Ks actual capital. So it's like so what? It's like you're using, let's say you're using 150 ticks on one silver micro. That's still only 750, but 750 on a proper count is like, ouch, ouch. Somebody's like stabbing you in the chest. So everything's relative, right? So if you want to hold trades, context has to be absolutely spot on, right? You need to understand when is a time for swing and when is a time for slightly smaller trades. But almost always I say to people 2R multiples. So divide the average session range by 4, 5, or 6. That becomes your stop loss. Try to keep your stops away from obvious highs and lows, inside highs and lows included, especially round numbers. If possible, try to exit around the round number, right? Don't enter when, let's say we're using 76 as an example here. So if it had dropped to 75.50 and I'm looking at 76 rejection, this is too late, right? I can't be running a short here. Why? Because we're in the middle of the range. So what the hell am I doing? It's a bad entry. So you have to understand when your entry is good, when your entry is bad, what is the quality of your execution. So it's not as simple as just, I'm just going to hold my trades, all of my trades forever for a very high R. There's more to it. So 2R multiples on my formulas for scaling stops, that's pretty safe. Because most times you have a very high chance of follow through of at least 2R multiples based on the formula, right? So if we are working with 210 ticks, let's say on copper, let's just divide that by 4. That gives you a stop loss of around 52 ticks. Can it run to 110? Absolutely. If you go a little bit lower, if you go to 5, then you come up with 42 ticks for a stop. But you then have to be a bit more careful because now you really need to position yourself so that the stop of 42 ticks doesn't include any highs and lows. And it's pretty far out, so you have to immediately become a little bit more accurate. But is 84 ticks possible wherever you catch it in a 210 tick range or average range? Yeah, of course. So, this is the market risk side of things, of how are your targets in relation to what the range is actually doing. And I'm actually surprised so many people are not aware of that. They're like, I don't know. They don't even know where ADRs are. It's like, how can you trade something and not know where the boundaries, like the statistical boundaries are? And again, watch my YouTube video later on today. So that'll be 11 a.m. Eastern, 10 a.m. Central. It's going to be a premiere with Ugly D starting the video. And then Pretty D arriving halfway through. So, yeah. You also get to go on a walk with my dogs. So I did a little bit of vlogging. Well, it wasn't a vlog. It was just like video of the dogs running around. So that's like a little interlude right in the middle to break things up, to break up the dryness. And it's only 14 minutes long, so I promise it won't take much of your time. And yet knowing these things will definitely kind of raise your awareness. Same thing with ADRs, right? If you've traversed, like for example, copper, it's already traversed basically the entirety of the ADR. So for me to be going more short down here or anywhere here, I would need to have a pretty good reason to short it. And yeah, today we have negative gamma, right? So if 580 breaks down, I will be aware of ADR low, but there will be another session that's going to have average session range low. So if we start to bleed through ADR low, I'm going to have another reference point that is also based on statistics, right? It's based on how much movement we get for COMEX starting at COMEX, rather than looking at the overall range. So if we're in an expanded range, those ASR levels, average session range levels, they can come in handy as well. So yeah. So yeah, Ahmed, really it's, it is a question of situational awareness at the end of the day. So how objective are you, and how confident are you in your levels? Are they based on actual dealer positioning and, distribution curves, or are they just like random MAs? Because I always feel that, like, look at how they behave around these levels. Call wall, 75. Where do they bounce? So this is not like made after the fact, right? This is a level that I had yesterday, previous day. Why? Because there was open interest there all week. And I actually said 77 a couple of days ago, it's possible. But actually, if we start to drop, 75 is the real stopping point because it's pretty massive. Where did they stop Asia? Well, is it an accident? No. Where did they stop this upside move? 76. Also an accident? No. So if I was looking at moving averages, I would see maybe this as a trend, and then I would be getting involved here for some kind of a breakout, and then this would smack me on the face, and then it would be like, ouch, what happened? But now, when I look at these levels, I see it clearly where they're engaging and why. So I can tell myself the reason why they are actually engaging. And I love being on the dealer side of things. I don't like trading against the dealers because that typically never works out. And if you can develop your skills so that you know that you are on the dealer side, it's like, are we in a negative gamma, which means amplified movement and potential for acceleration at the right times of day, or are we in positive gamma, which means mean reverting movement? So it's like, now where's the biggest open interest strikes? And then you look at those as areas of interest. You can pretty much forget everything else, even though I like to look at profiles, strength of auction, weakness of auction, how we got there, a whole bunch of other things. But in the end, it's all down to, having good levels that are actually reactive based on order flow, open interest, something, right? You've seen Hoag's weekly kickoff levels. They're so accurate because he uses a combination of support resistance, profiles, and options levels. So all of us who have been doing this for a long time, we usually have options gamma exposure somewhere mixed in there, because it does provide a much, I wouldn't say like crystal clear, because it's a little bit of a doozy to figure out at first especially, but it just provides you with clarity. And you have like these pinned points that you can orient yourself. And then on top of that, we also have ADRs, we have edges of distribution curve, initial balance and TPO profile, so how the prices are moving, what's happening, and all of that. To me, in my head, creates a super clear picture on like the majority of the days. I'm not going to say, I'm not going to be a muppet on some of the days. I can misread it. You can also have negative gamma coming in the middle of the day because something happens as a catalyst and everything changes in the blink of an eye. That can for sure happen. But most days, it's all pretty clear cut already at Asia, and then you just have to kind of follow the breadcrumbs of whatever the rest of the sessions want to do. But the levels are there way below before any of those sessions begin. They're just there as monthly options, and they somewhat change names and the number of open interest there. The interesting part is when you start to get bearish markets, and then suddenly you see the puts starting to get more expensive, and you're like, that's a change in sentiment. Like, for example, in equities, if you or in like Nvidia or somewhere, if you start to see puts getting super expensive, just don't long it because some people are doing a lot of protective puts. They know something you don't, and in that case, don't go, going to the bullish side of things, because something's up, and you're like, that's why it's good to look at the call put premiums, and the ratio between them, and it again provides an additional layer. But it's too much for beginners, right? All of this stuff that I'm talking about, you're seeing me after nearly 20 years of doing this. I didn't start this way. My first strategy was not even a strategy. I put in like I don't know, $400 into a brokerage account, and I lost it. It went to 4,000, and then I didn't know that you can take profits. I didn't know what a stop was. I was so green back in 2007, and then I lost the 400 and the 4,000 because I never booked profits. But yeah, so over time, I then, very quickly, I talked to a friend who was a supply and demand trader, and he was working for an institution, and they were using data and everything. But when it's a visual clue, you can see where the institutions have engaged. Maybe a little less obvious in super bullish markets, but you can still kind of see, right? So if we look at silver, where did they re-engage? So in this area, that's a demand, big institutional interest. This is not the speculators moving this. It's not the speculators moving it. This will be institution. So it's institutional flow that pushes it up. Now, interestingly, the high is still there. So we never actually popped the high. That's going to come at some point. And then where's the new supply? Well, right now it's all the way at the top here because that's where this wick is. So it's not this entire thing. But they started already to turn it around there. Why? Because they already sold it there. Sometimes you get a liquidity grab and then a huge run through. That didn't happen. All-time highs hold. And then on the downside, where do we have interest? Well, here's one squiggle, one little slowdown. Wouldn't call it a real demand, more a speed bump, but it's definitely more volume there. Why? Why? Because they spent 3 days there. It's like, what were they doing there? So clearly that's something there. So if we ever get down there, I will be looking at this area and this area. This is more like a rally-based rally for potential, maybe buying some silver miners or something, So silver drops there. Then I look at some silver companies. I might even buy more silver because I have some silver that I bought at 71.50, I think it was. So, and then obviously I bought some when we were breaking out at 35. So that's well in the money. But this one, the new one, is at 71.50. So we'll see. If we go higher, maybe I'll find another area where I can buy some more silver bullion. But yeah, so that's kind of how I look at it. And that was my first strategy, supply and demand, first serious strategy. Swing trading. Swing extremes and just catching ups and downs over a couple of weeks period. Did that for 5 years. Eventually started using, not eventually, I think very quickly I started noticing the NY cut was very big, especially in Forex. But across the board, it has a little effect. So I started using areas of high open interest as a magnet into the NY cut, and then a hedge against it, and that would be my entry. So if the whole day went against the trend and we were coming into the demand, so we were dropping, coming into the demand at post NY cut, high interest, I would be long there, and then I would hold that through the entirety of the Asia session. But naturally the stops for swing trading are much bigger. Typically I'll be using the entirety of the ADR for the stop. So let's say copper, 313. Silver, it would have to be about 1,000, right? So we have 900 ticks a day. So that would be a swing trade. And then when you're doing it that way, intraday whipsaws and squiggles and movement, your position is desensitized to that. Because it's not an intraday position. But intraday, we skimp on stops, everything has to be smaller, we have to be a lot more accurate, and it's almost like, investing on speed. It's every decision that you make can just completely either make you or break you, even though it shouldn't be that way. But generally, most people who are trading these accounts, they have very high risk of ruin, like very high. I would say even I have a very high risk of ruin here. So it's just how it is when you're starting on 4.5K, right? Or 2K. You either have to be patient and start on micros, and most people want everything now, and that's something to learn over the years. Excuse me. Sorry, I had a cough there. Don't know what happened. Yeah, so what indicators I have. They're not really indicators. I wouldn't call them indicators. You will notice that a lot of these are just price action, just like pure highs, lows. Indicators, I mean, is profile an indicator? It's more a tool for situational awareness, so no indicators. And the only indicator I would say that is a true indicator is VWAP. That's about it. Is volume an indicator? I don't know. Yeah, I'm not a huge fan of indicators because they are just lagging, whereas, you know, I want to look at real-time development. So yeah, I prefer actual prices that dealers use. Silver seems strong, MACD crossing soon, and 30 minutes may be long. No, not yet. We still need to retest 75. So here's the thing where people get themselves into trouble. You have a bounce, but remember London likes to do the range. So now if you go long and you don't wait for 76 to properly break and sustain above it, what you're doing is doing a breakout trade that makes no sense because you're against what's already happened there. So in order to make that safer, you can wait for a sustained move above it, then a retest of 76, which absolutely must hold, even with like little squiggles, but ultimately the 30-minute TPO has to hold above it, ideally without selling wicks, then you have a long. Another option is longs from 75. So if we're chopping in a range, we come back down, 75 is tested, and they have to test it. Why? Because they ran out of steam. They ran out of steam. Otherwise, we would have been over 76. So they need to go lower to the open interest to pick up more orders, not to like, oh, because these said so. No, it's because they've run out of steam. The volume has fallen below the average. They have to get that from somewhere. And they can get it either to the upside, grabbing stops and then reversing and then going down, or they can get it by using some of their cash flow to run it down to the next open interest level, which is 75. But right now, this is just a nonsense range due to lack of volume. Be very careful, right? Here we had volume. Here we just about had volume. Here the volume was already waning, which was another reason why I was like, nah, not sure they're going to be pushing this. And it took time. Again, lack of volume means extra time spent in a trade. So now they will need to retest 75 at some point in order to make this, if it's a long, again, negative gamma, anything can happen. It could go very short as well if 75 breaks. And then you're in trouble because you're sitting in a weird trade based on MACD, again, lagging indicator. But you're not looking at volume. You're not looking at where the location actually is and where the dealers are positioned. Like, look at where the prices reacted. Here? No. They reacted there, and they reacted here. And then further up, where did they react? Well, they fought around 77.30, I suppose. But where was the higher up? They reacted around 79. All of that is telling you these highs and lows. The reason why very simplistic sort of support resistance works is because the highs and lows will almost always be created outside of the dealer, from the dealer events, right? So it's not, oh yeah, there's a support, then dealers step in. No, it's the other way around. Open interest and dealers create support resistance because those are areas where they want to get involved, create the lovely transactions for the rest of us. So right now, this is just a range. Big range, massive range, but just a range. We need to wait until that's resolved. Do you use default volume average or do you change it to certain numbers? So I use a default, I don't know actually. I don't remember. Let's see. Let's have a look. So I don't change anything here, but I do change the MA lengths. Do I? I don't know. 29. Did I change any of that? I don't think I changed anything. So yeah, I think the volume is just default. And obviously you want to look at volume on slightly lower time frames as well, because 30 minutes is too big. Only if you're going to run like multi-day swings. You can look at how the volume is working across 30 minutes, 1 hour, 4. And then again, you have the intraday parts where the volume drops off because it's the dead time of the day. So yeah, but volume, just normal with a moving average, because you want to know what the average is and whether you're above it or below it. You know, do we have volume? Do we not have volume? And as soon as it starts to like drop like 3 candles, and there's no commitment, you need to like just wait for a better time of day. Yeah. Good morning, Dee. Would you please show how to select the glowing green in Topstep? You mean for the ADRs? It's just lime. If that's what you're talking about. It's lime color. So how did I select that? I don't know. Yeah, I think I just went to like a general hex code, and then I just dragged it until it was screaming into my eyes. And I thought, that's pretty good for my aging eyes. It's very visible. Yeah, but that's the hex code if you want to do the copy thing. So 04FF3D. Do you use that? Okay, I've went through that. Copros says, talking about VWAP, do you ever use it as entry depending on how the price reacts there, or mostly as target? Yeah, I will use it as entry for sure. I like to use it as, like, for example, if we get up to VWAP here, we also have the put wall. So yes, this is a confluence, and in this case, maybe more so on copper, because VWAP is more or less whippy-soy on copper. Copper VWAP than it is on silver, because silver likes to overshoot it and then reclaim. But yeah, on copper, I will absolutely, in the right, context, use VWAP. But I also like to use it for confluence. So for example, right now, we're coming up over VWAP. Maybe out of all the 3 of the metals, this might be something to consider. So I would consider a move back up to 590. Maybe that's my next trade, We don't have a selling wick after the 30-minute close at VWAP. We tried to go lower, but if we manage to sustain into like this next 30 minutes above VWAP, then this is another long. So this would be, again, not a biggest trade because I'm getting involved in the middle, but it's kind of trying to move higher. And out of everything, it is actually the only product. Let me just double check gold for a second. Yeah, it is the only product. It is actually still outside of the initial balance. So that's telling me that the auction, whilst not super strong, out of all 3 of these instruments, copper is actually the best. So actually, let's do that. Let's do a little copper trade. Actually, let's do micro copper because I want to save some of this money. And I'm going to use a bigger stop, so I'm just going to do 4 micros, and that's not going to show up here because it is a micro. So let's go here. There it is. And, oh, that's a big stop. Okay, no, that's not necessary. Let's adjust that a little bit. So now if I get smacked on the face, it's minus 190, so I would still have a little bit of profit on the day. But if this does work to get up to 590, that is going to bring me another 450. So just slowly building it up. Again, I'm not looking to trade massively because it's obviously NFP tomorrow and stuff. But yeah, whatever I can catch today, I'm happy with. All right, I think that's going to have to be it for the day because we are at time. It's been fun. FOMO. FOMO, fear market open overreaction. Yeah. To me, it's not FOMO, it's like annoyance of the market open overreaction. Yeah. Hex base 16. Yeah. All right. Thank you so much for joining me. I'm not doing a live stream tomorrow, but I am going to be on for the first hour of Fast Markets. So So I'm going to see you then, I suppose. In the meantime, check out my YouTube video on the Market Stalkers channel that will be premiering today at 4 p.m. GMT, which is 10 a.m. CT and 11 a.m. ET. I think that's all. All right, that's all I have for you. Thank you for joining me. This has been the Eurotrade on TopstepTV. I'm Market Stalker D, and I will see you very soon. Take care.